Good morning, everybody. Hope your evening went well last night. It was, we started to warm up, and we pushed 90 late yesterday with humidity to match. So we're going to have several days of 95, 100 degree temps with humidity starting out in the morning in the 75 to 80% level, like living east of the Mississippi. Thank goodness for air conditioning. Last night, this has been a week where we haven't had a hell of a lot of news. Last night, the biggest piece of news that everybody keyed off of was that the Greek Parliament approved the European Union's preconditions to negotiate for Greece's third bailout, and that was pretty much expected. China has banned rail travel for people that are in default or own money on their stock trading accounts. Wouldn't you like to be a stock player in China and have your account frozen where you can't sell, you can only trade from the long side? And if you owe money, they restrict your travel. They arrest you if you sell short. Now they're going to restrict your travel if you don't pay them. And people look to China as a model or leadership. I guess if you're a tyrant, it's a pretty good model to follow when all is said and done. So anyway, we don't have a lot of news. The stock markets around the globe are up, including the E-mini. Nothing's really changed fundamentally around the globe. Commodity prices are under pressure. Last night, the euro and gold rebounded a great deal. Crude oil is kind of hanging just around $50, so I don't expect a lot of changes, although we can get relief rallies. So the biggest dynamic I think that we face today is going to be the direction of the ES, which appears to be higher, and option expiration. Now, yesterday we said that the play would probably move up to 126 puts and 127 calls to reflect yesterday's floor at 126.05, and that's exactly what happened. So if you look at the market structure, 125 is where the open interest has been for a long time in puts, and 127 is where the open interest has been for a long time in calls. And it doesn't look like while the 30-year is trading up, the 10-year is kind of staying in its place. So the knob spread is getting better. Yesterday, the play moved up from 151 in the 30-year to 152 to 154. So mathematically, the close for the 10-year is still 126, and the close now for the 30-year is 153. So these are the two. The direction the E-mini is probably going to rule early in the session. The options expiration is probably going to curb, stop the buying at some level, and support the market and stop the selling from some level. This should lead to a trading range. Today's news: jobless claims, 279. That's pretty much 275, 280 is where the default is. The last several reports have had at around 280, closer to 280. Chicago National Activity Index, CNAI, minus 0.05. It really swings from minus 0.15 to plus 1.5, but if it's less than 0, it shows economic contraction. LEI at plus 0.2%, and no one pays any attention to LEI anymore because of the interest rate component. Interest rates are, in most people's estimations, artificially low, and natural gas inventories at plus 71. So the focus really to me is going to be jobless claims, which comes early. Then the direction of the E-mini, number 2, and then will options expiration hold us in a trading range. So right now we've got volume moving up in the distribution, so we'll put our first sell at 15 to 19, and then 23 to 27, Market is trying to trade higher. It is pointed higher. If we do a London split, which is what I recommend for everybody to do, you can see that they were willing to pay up in London. Now, based on yesterday's activity, a sell at 13 or over 26.11 is okay. But the easiest trade to see, I see, is going to be failure to take out 12 to 16. That should set us up on the buy side. I'm going to leave it at 4 to 8. And it might take a 9 to get into, but I think they can get stops below 8. And then 26 to 20, 01 to 09. Okay, the ZB, the knob spread held at 26.29 overnight. To me, that is the best directional indicator for position and swing trading that there is out there as far as treasuries go. It's just really hard to fight the tape. Now we're looking at a B pattern in the overnight. We have rejected prices above 16. So a sell anything over 09 is fair. 08, 09. We're going to try to top of value is 14. There's 8. So selling 14s to 18. Sell failure to take that out. I think that is the easiest trade to see than 27s to 31s. We're going to play at 154, holding as resistance. So if you want to limit sell out there, 153.31 looks reasonable. 53.01, 29 to 01, buy 1. That's where support is. It's a stretch to get down there. We can't take out this 4-5 level. Market's stronger than I think it is. And then we're back to where our breakout was. Last rotate down yesterday stopped at 17. We have this high right here at 22. We've got that high right there at 19. So this 17 to 21 area, there should be some really good support down there. Have to give a lot of room on. We really open up our number 2 points on gold because of this expansion and contraction of the knob spread. And this thing's moving. It can take the 30-year 2 to 3 points. We've seen a slowdown this week where we've been trading 1 point plus, which means maybe some of the volatility is going to leave our markets. It'll decrease the profit opportunity, but it won't change the regularity of the patterns and the setups, etc. Okay, 5 to 7 is resistance. If we do a London split, relief rally, new buying, who knows. This 1085 area, 1075, 1085 has held up pretty good so far. I know that Jim Rogers wants to be a big buyer at 1,000 if it'll ever get there. So 4 to 6 is a sell. Maybe get stops above the London high. And then our 9 to 11, we sound like a broken record. On the buy side, 95, 97, buy 1. Leaning against the London low, then 90, 92 for buy 2. Okay, the euro. Everybody, yeah, and you know, it's not unexpected. I don't know if everybody's euphoric. I mean, it drives. You know, we had a step, we had a gate that we had to get through. The Greece Parliament had to pass the EU's conditions for to begin negotiations for 3. In the meantime, the European Central Bank is supplying Greek banks with enough funds for liquidity, which most of it gets repaid back to the members of the European Union as debt is paid back. So 15 to 25 is where resistance is right now. This market looks like it's headed up, so it's going to be sell 1. Then 50 to 75, that area right there will be sell 2. We could get some extra volatility off of short covering. The breakout came at 75, so buy 1's at 75. And then buy 2 is going to be at 50. Crude oil didn't crash last night, but it's definitely pointed lower. Crude can rally $2 or $3 when the short covering begins. It's just so playing from the short side, we have to be a little more cautious with our stops. You can see this breakdown came at 49.75. The overnight high is 50. So 50 to 75 is sell 1. Last rotate up yesterday stopped at 50.44, so they'll come inside that, try to pick up this value area high. 50, 50 and a quarter, sell 2. On the buy side, it's 49 and a quarter, 49 even, and then stops below 50 will make it 48 and a quarter, 48.50. Okay, the E-minis pointed higher. Every equity market in the world is up. Yesterday the Dow was off 68 points. E-minis trading up about 4 from yesterday's close. And again, I just want to, let's just go take a look at the reality of this contract. It is not allowed to sell. So the top end of the trading range is this 21.25 area right in here. 21.25.35 is resistance, and we've got really good support in the 20.50 area. And that's about, what, 75 points. So a 70-point trading range is fairly common, fairly typical. But what we don't, this market, it just isn't allowed to sell. So this 15 to 17 area where we spilled, I think that's an area that we need to take a pretty hard look at. Might be where a day trade short sets up for us again, that 15 area. Looking at it a different way, you can see that the selling really does start really at 20 of late, 20 to 25. We have the start of that selling, and Globex the other night was in the 21.15 area, and I think that's kind of important. Can't get through 15 to 17. That sets up a retest to 2100, 2102. Then we have this breakout that came at 75. And 75 to 25 would be 50 points. So 50 to 70 points is what this thing will do in a trading range. Chuck, I haven't heard from Rich today or tomorrow. Usually it's on today's. So 13 to 15 is sell 1. 19 to 21, sell 2. On the buy side, 5 to 7. That's pretty aggressive. I'd like to get that done closer to the buck, but don't know if we can. I like buying against 2100, 2102. Why? It's 2100. It's a pretty round number. Jobless claims, 279. no one will pay any attention to the Chicago National Activity Index, minus 0.05. But again, when you get in and you really look at the macroeconomic information, it's not showing economic growth. And when you look at how the earnings are once again being reported, you know, if you're a Fortune 500, you have infinite ways to make your earnings per share targets. And it's the law of unintended consequences. I think it was under the Clinton administration. As a CEO, you can't make more than $1 million in salary. I guess that covers your overhead and your bills. But how do they get compensated more? It all comes from stocks, stock options. And how do you make sure that you get paid quarterly and annually and get your bonuses? You keep your stock price high. And how do you keep that stock price high? You buy your stock back. You cut overhead, you cut expenses, you merge, you pick up another company, you get rid of overhead through the merger. The synergy of two companies combining like that, you buy your stock back. You borrow to buy your stock back. And why is that? To make sure the executives get compensated. That's just a beautiful example of the law of unintended consequences. If you let the companies pay them out of, you know, we had a great revenue year and we have this kind of cash and we can pay you guys this amount of money based on this cash. You don't have to spend money that might hurt us long term buying stock back so you get paid what you think you're worth. It just, when you get in there and you start playing with this stuff, the unintended consequences can be immense. And so what will happen right now, if the market ever does crash and if interest rates ever do go higher, you're going to see a lot of companies suffer because of that. That's all I have for right now. I'll be back with you as soon as possible. It's going to take a while to get everything up and posted. See you in a bit.